Hi, this is Dan Collins joining you live from the Las Vegas Traders Expo. I'm joined with Toni Hansen, president and founder of tradingfrommainstreet.com. Tony's been educating traders at events like these for a long time now. And
that was a very PC answer.
That was a very, well, we do what we can. I know that
That's
today's
kind of you
event,
not to date me.
Oh, good. At today's event, you've been talking about trend exhaustion.
Yeah.
And which is really timely because we're in a period where we've had this kind of low volatility and people were thinking, when's the market's going to move going into 2018? Now we have some volatility. In fact, yesterday we had a 600-point move in the Dow. So when you teach these things, how do you adjust? I mean, are there indicators that are specific for kind of a range-bound, quiet market that you have to either use different indicators or broaden your parameters when all of a sudden we're in a period of increased volatility?
Well, that's a really interesting question because I don't change much how I trade given different periods of time that were happening in the market because I trade so many different time frames. So I'm used to seeing the things that we've seen happening on the daily and the monthly time frames happening intraday all the time. So basically what it comes down to is what's my holding period going to be like for different periods? How do I trade different types of markets? So like now we're going into a phase in the market that's actually really good for swing traders. So like if you're holding maybe like 3 to 10 days at a time, this is a good market for it. As long as you're keeping in mind you're really going to be wanting to focus upon the larger channels that are happening in the market. So you want to initiate positions basically at highs and lows, obvious times, but then the midway point too. So when you get like halfway in that range, you'll usually get some nice little bounces and pops. You just have to be prepared that the market might kind of go sideways and not really do as much, but it's not that you have a high risk involved with it because that's more like a scratch trade type of environment, or you're just looking to take some smaller gains, not like those big trend moves. And then after it's been in that midway of the range for a little while, then it's great to look for a continuation back to the other end of the range. And those of you that trade oil, you've seen that a lot. And then finally you get the break where the momentum shifts, that you then get a break out of that channel, like we've seen with oil, with the breakdown out of oil. I don't use a lot of indicators though. I rely on reading trend development and momentum. There's indicators out there for those things like the MACD and things like that, but I find that it clutters up my charts, it creates second guessing, and that's a big problem. So when people come to me and say, oh, what's your favorite indicators? Well, if they're looking at my trading charts, there's probably nothing on them. I mean, people are like, even volume. I don't even have volume on my own charts. But you're like, what? But I will teach newer traders to use things like volume, moving averages, just the simple moving averages like at 20 or 40 or 50, 200. You're not getting into any like crazy off number thing because what you're looking for is you're just looking at it as a measure of time development and momentum, and I'm not using it as like a trigger point. And then Fibonacci is always a go-to.
Well, yeah, and there are many indicators that all work if used properly.
Right.
But you can overload yourself on them, can't you? If you have more than 3, you're getting into a danger area.
I know. I see people's charts and I'm like, I don't even know what you're looking at here. Like, how do you even see the price action on this chart?
Yeah, and it's, individually they all could work, but you get to the point of paralysis by analysis, and then your 4th and 5th and 6th indicator may thwart what your secondary and 3rd indicator did. That makes it hard to pull a division.
Keep it simple, stupid. That's just like what you've got to go back to all the time with all of these many different styles of analysis out there.
Okay, well, Toni, thanks for being here. We're going to take a quick break. and then we're going to be back with Toni and talk about some other indicators here at live at the Las Vegas Traders Expo.